How to get a great deal when you're buying your home. I've helped my clients save hundreds of thousands of dollars between negotiating on purchase price, seller credits, home repairs, or even finding them the best loan product. And here's a list of the success stories that my clients have had when buying their homes. By the end of this video, my goal is to help you understand how you can find the best deal when you buy your home. And you might be wondering, why am I sharing this? I want to share my secrets because I really believe that home ownership provides a lot of stability for families, and it's a tool to build wealth. If you think about most of the older people that you know that are homeowners, where is most of their wealth? It's probably in the equity in their home. I've also met so many people who felt like their agent and or their lender did not have their best interests at heart. A couple of my clients actually fired their agent and lender and worked with me instead because that exact scenario. And kind of selfishly, I love being a part of the home buying journey, and I love that proud moment when someone becomes a homeowner. Okay, now let's dive into some real estate basics. Real estate 101, we're going to talk about contracts and power players. So there's three main contracts that govern real estate transactions. The first one, it's between a seller and an agent, and it's called a listing agreement. So when a seller signs a listing agreement with an agent, they are hiring that agent to help them sell their property. The second contract is a buyer agreement. That's between a buyer and an agent, and that buyer is now hiring that agent to represent them in the purchase of their home. And the last contract, the third contract, is the purchase agreement. The purchase agreement is actually between the buyer and the seller. Purchase agreement is also known as an offer. So when a buyer submits a purchase agreement to a seller, that's their offer to purchase that home. So now that you know the three main contracts and the three main players that are involved, we're going to talk about who's going to sell you your home. So if you've been home searching, you probably are using some online portal, maybe Zillow, Redfin, maybe your agent set you up on a home search, the MLS, and that leads into the seller universe. What do I mean by seller universe? So there's active sellers, there's passive sellers, there's people that you might know, and there's people that you don't know. And so when you're looking online on Zillow, Redfin, the MLS, those are active sellers that we know want to sell their home. They've listed it, it's available, everyone can see it. What a lot of buyers don't know is that there are actually properties that aren't listed on the MLS as well. Maybe your neighbor is thinking of selling their home, but they want the right offer. And maybe they don't want to list it, right? Maybe they want to sell it themselves. If you're renting and you want to buy, maybe ask your landlord if they're willing to sell your property to you. Now, keep in mind, there is a high likelihood that the property that you buy will be from an active seller that is on the market. But in your home search, don't neglect homes that are not on the market as well. Let's walk through a passive seller example. So let's say a seller listed their home on the market and was an active seller, but their home didn't sell for whatever reason. And so now that is an expired listing. Well, we know that they wanted to sell in the past and they were unsuccessful. Maybe they still want to sell, but they don't have the right buyer. So in this scenario, you can ask your agent to look for expired listings, which are homeowners that unsuccessfully listed their home and did not sell, if it's the right fit for you. And they could reach out directly to that seller and say, Mr. and Mrs. Seller, I have a client that is really interested in buying your property. We saw that it was listed in the past. Are you still considering selling? And so why am I sharing this information? Well, this could be another potential avenue for you to find your home. Now that you understand the types of sellers or the potential sellers out there, you need to think about what you really want in your home. Every successful buyer that I've worked with knows almost exactly what they want and maybe more importantly, exactly what they don't want. This will save you so much time, and this will give you the ability to move forward with 100% confidence, right? You're only going to be looking at houses that you would actually consider living in. And so now that you've actually made the decision and you know what you want, let's talk about the 4 stages of the real estate transaction itself. So stage 1 is going to be strategy. And the goal of the strategy stage, this is before you look at any homes. This is going to be establishing a clear game plan. These are the types of properties we're looking at. This is what we really don't want in a house. This is what we want in a house. If we see a house that hits all these criteria, we are going to write an offer. And then also arrange your financing, right? If you're paying cash, congratulations. That's great. Most folks are getting a mortgage, and they will need to arrange that financing before they start looking at homes so they can know what their purchasing power is and what a comfortable monthly payment will be. After you've come up with your game plan, very clear game plan, you know your financing, you know what you're looking for, that's when you start the search. So in this search stage, what you're doing is you're going out, you're touring these homes. This is the fun part. You imagine yourself living in these homes. Once you find that home that feels right for you and it works within your budget, start making offers. Start writing offers, right? So if you find that right home, that's where we're going back to the contracts here. You're going to go ahead and submit your purchase agreement, and that will be your offer to buy the home. Now you found that home, you're making these offers. The third phase is the contract phase. So this is where you're negotiating and finalizing the purchase of your new home. So in the contract phase, you're going to schedule your inspections. You're going to get your appraisal. You'll negotiate your contingencies, and you're going to finalize your financing. So we'll kind of dive into the details of that in a little bit. Once you're through the contract phase and you've finalized everything in escrow, you're going to move into closing. And so the main goal of closing is to actually move into your home. And so what do you mean by move into your home? Like, it's pretty straightforward. You get the keys and you just move in, right? Not quite. So you're going to need to plan your moving logistics. You're going to need to perform a final walkthrough, and you're going to actually need to complete the closing process, which if you're getting financing means you're going to sign loan documents. That's just a high-level summary of the 4 stages of home buying. Now I'm going to dive into where the magic actually happens. And so let's start with game plan design. So this is in the strategy phase, right? You're coming up with your game plan, you're figuring out the financing, and another aspect that's kind of important is timing. Are you flexible on timing, or can you wait? This could potentially be a tool in negotiation, right? Depending on what the sellers are looking for, maybe they need more time because they're moving out of state. Maybe they need you to move in tomorrow because they want a fast close. So understanding your ability for timing can be a negotiation tool. Another aspect of game plan design is nice to haves and non-negotiables. So when you're looking at homes, think through what your lifestyle is. What is an absolute must have in your home versus a nice to have? And why is this game plan design aspect so important to having an unfair advantage when writing offers? Is if you understand what you're capable of offering, then you can craft a winning offer to what the seller needs or wants. And so another aspect of game plan design is market dynamics. Understanding the market dynamics and pricing are a key ingredient to finding a great deal. If you understand what's going on in your local market, you'll understand the seller's pricing strategy, right? And so the 3 main aspects you need to understand about pricing in any market, pricing is fairly predictable if you know the right questions to ask. And so the first question to ask is, what is the seller's pricing strategy? The second question to ask is, what's the current monthly supply of inventory? Let me walk you through what those 2 metrics mean. So the first is seller pricing strategy. Basically, when a seller prices their home, they're going with one of 3 strategies. The first is aspirational pricing. That means they're shooting for the stars. They're listing the home higher than what the current market is shown or recent sales have shown, and they're leaving some room for negotiation. The second is perceived market value. So they are just pricing it with the market. If their neighbor's home that's comparable recently sold for $800,000, they're listing theirs for $800,000. And then there's event pricing. The third one is event pricing. And that is they are trying to list below the market, right? So if their neighbor's home sold for $800K, they're listing theirs for $750 or even $700, and they're trying to create this bidding war, right? They're trying to get as many offers as possible and really go up and over that 800. When you are in the search phase and you are touring homes, think about the pricing strategy that they're using and think about the potential competition you'll have because of that strategy. And so now the second metric that's super important is monthly supply of inventory, also known as MSI. MSI is the number of months it will take for current inventory to sell given the current sales pace, aka demand, and given that no inventory comes to the market. If it's under 5 months, that means it's a seller's market. That means inventory is moving quickly. If it's between 5 and 6 months, that means it's balanced. So buyer demand is pacing inventory. And then if it's over 6 months, that means it's a buyer's market. Another third metric that is important is days on market. And so days on market is the number of days a property has been listed for sale until its status has been changed to under contract. And so understanding this one can kind of show you if a property's been sitting for a long time compared to what's been sold recently. Don't worry. So now that you understand pricing strategy, month supply inventory, and days on market, you'll be able to win in any type of market, seller, balanced, or buyer market. A little bit later, I'll walk you through some case studies of my clients purchasing homes in a seller's market and still getting some wins. And now that we kind of talk about market dynamics, let's talk about the negotiation piece, the contract to close phase. This is where a lot of the magic happens. So when a property goes from active to under contract, that just means that the offer has been accepted. The seller and the buyer have come to an agreement on the terms of the purchase. When you are closing on a property, all that means is that all the terms of that purchase agreement and offer have been fulfilled. Everyone's done their jobs, and now the seller can give those keys to the buyer. The negotiation phase is where good agents shine, right? So good agents will understand how to write a winning offer with acceptable terms, and they'll understand that pricing strategy so that you can write a winning offer but still get a good deal. And so just to reiterate earlier, I talked about how buyers will have contingency periods. And so normally, in California, normally buyers will have 3 outs, 3 ways to get out of the agreed purchase agreement. And let me take one step back here. So why are these contingencies so important? These are what protect your deposit. Typically, when you're writing an offer, you're submitting 1 to 3% of the purchase price up front to escrow as a good faith deposit. And as long as you have one of these contingencies in place, you could actually cancel the contract and get your deposit back. And that's one, the physical inspection contingency. This is where you can get your home inspections. That's going to be the physical overall inspection of the home, a termite, a sewer, whatever you deem necessary to want to move forward. And this could be, this could be a deal breaker. Maybe you come back, you get the inspection report, the foundation's messed up, the roof's messed up, and the seller won't repair those things or give you a credit for those things. So you say, adios, I'm out. And then they return your deposit. Totally reasonable. The second one is the loan contingency. The loan contingency, if you're getting a loan, basically states that, within this certain time frame, let's say 14 days, that you will get your loan finalized. And so let's walk through why this one's important. Maybe you write an offer, and in the first week, for some reason, you lose your job, and now you no longer qualify for the loan on that home. So in this scenario, same thing. You could basically show the sellers, hey, I no longer qualify for this loan. We need to pull out of this contract. And that's allowed based on the terms of this contract. And so the last and third contingency is the appraisal contingency. The appraisal contingency, I'm just going to walk through an example because it's easier. Let's say you agree to a purchase price of $500,000 and you get an appraisal, and the appraisal comes back at $450,000. So there's a $50,000 difference. In this scenario, you can actually ask the sellers to lower their price to $450,000, and if they don't agree, then you can walk away and you still get your deposit back. And so leveraging and understanding how these 3 contingencies work can be a huge negotiation piece for you as the buyer. A couple other negotiation tactics that could be helpful is timing for the seller. Timing for the seller could be a big one, right? Maybe they want to close in 21 days. And because they want to close faster, they're willing to take a lower price. In other situations, right, maybe sellers want more time, or maybe they want a rent back. And so with a rent back, they actually lease the home back from you after close. Maybe they need time to move or something like that. But that has been a negotiation tactic for us as well, for some of my clients in the past as well. And then another one that still kind of works is the buyer letter. Like when I submit offers for my clients, I always ask the seller, I always ask the listing agent, are you presenting buyer letters? And some still are. 2 of my transactions this year, the sellers wanted to sell to a family and not an investor. And so Keep in mind, a part of this process in finding your home is that you're going to write offers and they will not get accepted. That's totally normal. That's okay. My advice is that you will likely need to write multiple offers before you get one accepted. Now that you understand the real estate process and you understand different negotiation points and tactics, let me walk you through a couple wins during seller market for my clients. So the property is 4728 Coke Avenue. This property was listed for $740,000. My clients ended up purchasing it for $700,000. This was during COVID, which was probably the craziest seller market that I've ever seen. And not only did they get this home for $40,000 less than list price, they got a $4,000 credit back to them. And so I'll walk you through some of the stats. This property was on the market for 44 days. The average days on market at the time was 6 days, and the MSI was 0.8. If you can recall, 6 months is a balanced inventory. Anything below 6 months, seller's market. So 0.8 is an insane seller's market. And so let's talk about the seller's pricing strategy. They listed it at market. That same weekend, we looked at a house around the corner in the same neighborhood. That one was listed for $729 and ended up selling for $760. So we knew that $740 was actually a fair price. But where did we see the opportunity with this one? So first, the listing photos were terrible. The property, when they listed it, had tenants in it, and they took all the pictures with the tenants' belongings in there. So it looked cluttered. The property was not really very renovated. It looked very lived in. It was an older home. But once again, we knew homes in the neighborhood were selling between $740 and $800. You might be wondering, why did you guys offer $700? So luckily for us, when I pulled comparable sales in the area, there was a fixer that sold for $660. And when I submitted the offer, or when I talked to the listing agent, I actually mentioned, these other homes that are selling for $740 to $800, they seem like they're in much better condition than this property. Also, I found out that, by talking to the listing agent, I found out that the sellers were going to start painting and doing some renovations. And I said, look, let's not have them do that. Just let my buyers do that so they can save money. They can save the hassle. They don't have to, hire contractors to do this. And I also found out that this was 3 siblings that grew up in this home together, that, their parents passed and they were selling the property as siblings, and they actually really wanted to sell to a family. So that helped us because we wrote a buyer letter. My clients were a young couple who was trying to raise their family there. They wanted to set their roots down. And based on the buyer letter and the fact that they had gotten basically no offers because the way it was marketed, they accepted our offer at $700. So even in a insane seller's market, we still found this opportunity because we looked at days on market. We overlooked the fact that the photos were bad. We still toured it because my clients knew they wanted to be in this neighborhood, and this could be a better opportunity than any of the other homes we were looking at. And so on top of getting this for $40,000 below list, I was able to negotiate for a $4,000 credit. If you don't know what a credit is, that just means the sellers are giving $4,000 back to the buyers in the form of a seller credit. The buyers can use that on whatever they please. It could just be less cash. The $4,000 could just be applied to their down payment. The $4,000 could be used to buy down your interest rate. It's the buyer's choice. And so how did we get this $4,000 credit? So when I was talking to the listing agent and based off of my observations, we were having a discussion about the roof. And so the roof was older looking. The agent said, it probably has 15 years left on it. The sellers really don't know. They haven't lived in this home since they were kids. But once we got our home inspection, the home inspector basically said, no, this roof has, 1 or 2 years left on it. It needs to be replaced. And so at the time, a roof replacement is probably $8,000 to $10,000 in our area. And at the time, my buyers had actually just sold their home in another city. So they were under the impression that there would be no negotiations, they would get no credits, and they knew it was a crazy seller's market. Their home got over 10 offers. And so there was no negotiation in their scenario when they sold their home. But I told them, hey, let's just ask. It doesn't hurt to ask. We're already in escrow, and this roof does need to be replaced. That's going to be a big ticket item. So I thought it was reasonable to ask the listing agent for half the cost of a new roof. And the listing agent and the sellers completely agreed because the inspection report showed that they needed a brand new roof and they wanted to sell the home. So the big wins on this one, 40K below list during a seller's market and $4,000 in credits. And they bought this home for $700,000 in 2021. The value today is probably around $870,000. Big takeaways from this case study is that understand pricing strategy, days on market, seller motivation, and don't be afraid to ask, even in a seller's market. Okay, I'm going to walk through another example here. This is actually why choosing the right lender is important. So this is a situation where a lender understanding the loan requirements and having good communication actually helped get an offer accepted. So I actually wasn't their first choice because I didn't live in San Diego. I live in Orange County, but I ended up being the right choice for them and helping them get into their home. So these buyers actually worked with 2 different lenders in the previous 9 months. They couldn't get an offer accepted. They couldn't get these lenders to communicate with them in a timely fashion, I guess. They just didn't like their communication style. So why did they really finally decide to work with me? They basically said that I was the only one willing to walk them through multiple scenarios and look at different loan products. At the time, they were pretty dead set on using a conventional loan. At the time, FHA rates were much better. And then on condos, conventional loans do have actually worse pricing. So I, hopped on a couple Zoom calls with them. I created a couple spreadsheets to help them look at their monthly payments, different down payments. I ran through all the scenarios with them. Their other lenders did not do any of that. And so we finally decided to use an FHA loan because it was about $500 a month cheaper for their monthly payment. And so you're probably wondering, well, where's the actual lender advantage? Like, yeah, I helped them save some money every month, but more importantly, I helped educate their real estate agent and the listing agent on the FHA loan. Both the listing agent and buyer agent have been in the industry for over 20 years, and they were both scared of an FHA loan. They were both kind of weary of it. They just didn't understand it. And the FHA loan is a great tool for many first-time buyers. So I basically hopped on a 3-way call with the buyer's agent and the listing agent, walked them through, what the potential issues that they were scared of. And I let them know that this should go very smoothly. There should be no issues with this. The listing agent basically called me and thanked me and said, "Thank you for walking me through this process. Thank you for giving us clarification on the loan. The other potential offer we're thinking of accepting, I have no communication with their lender." And mind you, I did this 3-way call with all the agents on a Saturday morning because that was the availability for everyone. But that's what basically got the offer accepted. So when you're picking a lender, you need to make sure that lender is going to communicate with all parties, especially with that listing agent, because that listing agent wants to know that you as a buyer can fulfill the obligations and get your loan closed. So yeah, this was a huge win because the clients finally got into a home after a year and they were saving $500 a month because of the loan product. Okay, so now that I covered 2 case studies, one of a buyer winning in a seller market in 2021 and one winning because of lender advantage in 2023, I'm going to share a win from 2024. Okay, so the property address is 9392 Valerdo. The list price was $1.15 million, and this closed in April of this year for $1,060,000. That is $90,000 below list price. And now let's take a look at the home stats and how we kind of identified that as an opportunity. 34 days on market. The average days on market was 6 at the time for similar properties, and month supply inventory 0.8. So this specific zip code, there's not a lot of inventory that pops up. So when it does, it usually gets bought pretty quick. As you can see here, well below the 6 months, crazy seller market for this specific zip code. The seller's pricing strategy was somewhat aspirational. We think that if they would have listed the home for 1.1 or maybe 1 point or under 1.1, they probably would have had multiple offers. Another opportunity that we saw, similar to in 2021, was these listing photos were not very good. The agent didn't do a good job marketing this property. My buyers knew exactly what they wanted. We've been looking at that zip code for a little bit, a couple months. And so they knew that if they could get this property for 1.1 or below, it would be a pretty good deal. When we offered $1,060,000, we fully expected a counter at 1.1. What actually happened was I asked the listing agent if the seller would consider a buyer letter, and she did. She said, "Yeah, I would love to see the buyer letter. I would love to know who I'm selling to." And the seller said she would Much prefer that this go to a family versus an investor. Again, very similar scenario. This was an older seller. She lived out of state. She used to live in this home a long time ago. Her family lived in it, but her listing agent dropped the ball in terms of pricing and marketing, and that gave us room to negotiate. So, just based off the price here, my buyers got a good deal, and the appraisal actually came back at $1,075,000. I do think that appraisal could have been a little bit higher, but just 6 months later, the value is around 1.2 million. So they bought this in April. We got it below market price, and today it's probably worth 1.2. So they already built some equity. So I hope that these case studies are enough proof for you to know that these strategies work and you can find a deal. Doesn't matter what the market is. You just need to know what you're looking for. So just to summarize the three big things that you need to know when you're looking for a deal. First is the seller's pricing strategy. The second is the month supply inventory. What kind of market are you in? And the third is days on market. And you can use those three pieces of data to find good deals. So as always, thanks for watching. If you want personal help trying to find a real estate deal, go ahead and email me.